Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at the MarketSite studio, we have Daniel Newman, CEO of Futurum. We're going to discuss leveraging AI technology to gain an edge and remain viable in this highly competitive market. Daniel, it's great to see you as always. Welcome back to Trade Talks.
Thanks for having me.
Let's talk about the winners and losers in AI. What sectors, what areas do you expect to really perform in this environment, and which ones do you think might lag a bit?
Yeah, as a little bit of background, we are in the process of launching a global market sizing report for AI. So we're looking at platforms, we're looking at software, we're looking at hardware. And first and foremost, we see the market growing by about threefold in the next 5 years. But as the market grows that quickly, as you know, it's not going to be evenly distributed. And there are going to be some winners and there are going to be some losers. And let's start with losers, or we can call them laggards.
Right.
You got markets like real estate, you got industries like oil and gas, you've got industries like heavy manufacturing. These industries, while they've moved towards some automation, of course you're seeing, I can tour a home and do maybe some VR. The way they're going to be able to implement AI is not going to be as quick, and it's going to make these companies under a little bit more pressure to find ways to implement AI to scale their businesses. But of course, the obvious winners on the other side, the tech industry, of course, we've seen growth come really fast and furious, Jill. It's been pulled forward quite a bit. I think you'll see sectors like retail really be explosive. And I mean, you can kind of think about things like the way we've already done on Amazon. Somebody says you get the suggested products and things. So AI is only going to get more intelligent, the way it can generate insights, help you get to the right product faster. So those are a couple of the industries we really see as quick winners that will continue to benefit from the AI explosion.
Let's talk about continued macro uncertainty and political strains that we're dealing with domestically for sure, as we think about what the regulatory framework could look around this.
Yeah, I think there's a couple of different strains. I think you hit first and foremost, you've got the fact that we still don't know. I mean, you see OpenAI is under quite a bit of regulatory pressure. We had kind of this rush to get AI into the market, and I think there was a ton of enthusiasm and excitement, but some of it could have been maybe mistaken for exuberance. How fast we saw things grow. The only obvious, winners are the ones that make the hardware, for instance, for accelerating compute. Like a lot of the software, we're still kind of listening. Are they going to charge more because of that? Are they going to incrementally make money because of that? But when it comes to the governance, it's, these systems still aren't always 100% accurate. And I don't know about you, but when ChatGPT first hit, or Bard, I was using it all the time. I was like, whoa, this is great, I'm using it for this. And actually I found over 3 or 4 weeks, I actually steadily sort of went back into some old behavior patterns because I don't know that I was getting as much value, and there was still some uncertainty about how accurate it is. So the regulatory framework kind of being applied around all of this, it's got to be about getting things right, accuracy. It's also got to be a lot about privacy, personal data. How does this all work? Because the best systems are going to be merging enterprise data, this private data that enterprises have, and then of course the public data, which is what we're all playing with. But like I said, it's kind of more like Search 2.0 to me, or 3.0. It's like the next generation of search.
I feel like there was a lot of exuberance because ChatGPT, this generative AI, is consumer facing. It's not like when blockchain or digital assets were maybe institutional or techie people understood it, but everybody knows ChatGPT. And I believe it was, as of June, almost 10% of ChatGPT usage went down. Schools are out, right? So I mean, everyone is using it. It's not just you and I in the business or tech folks.
Yeah, well, and also I do think there was a bit of the, wow, here's something cool, shiny, and new. I want to go play with it. Look at Threads. Right. Everybody went and they play with it, and now you're seeing huge usage declines. Utility matters. And so for a lot of people in the workforce, or people even in education, like students, yes, for quick research, it works. It's like the next level of what Google was. Meaning, when you and I, went to school, and I know you just finished another degree. Congratulations on that. We used Google a lot, right? You got to the point where that became a really great, if nothing else, augmenting LexisNexis or whatever other tools you're using. This actually helps even next level. Cliff Notes. So what's old is new. This is Cliff Notes. I mean, now it's like, I don't even need to figure out which Google thing, it's going to consolidate it for me. But now people are like, well, did it consolidate the right info? How is it prioritizing what rose to the top? What became part of that abstract? How do different LLMs interpret that? And is the data I'm getting back the right data? And if you're not certain, if you're using this for business cases, if you're making investment decisions, if you're writing a thesis or a doctoral, you want to be 100% certain that you can trust the data that's in front of you. And I think people are still exploring, can I trust this data? It gets better every day, though.
Yeah, no, it certainly does. So when you think about the AI landscape looking forward, what are going to be some of the key growth drivers?
Well, I think one of the growth drivers is how we're going to be able to combine that enterprise data with these large language models. We've kind of seen a rapid democratization, meaning that early lead that we thought that Microsoft had with OpenAI, or that Google had with DeepMind, and with Brain and Bard, and now you're seeing these models from Anthropic like Cohere, and you're seeing models from Hugging Face, and you're seeing the fact that many companies are even looking at using multiple models. But what's going to get ahead is most businesses, enterprises, they don't want to have to think about buying hardware to accelerate their data. They don't want to think about developing software. If I'm in real estate, like a lagging industry, I'm like, is there a tool that I can apply immediately to my business that could lay on top of images, that could lay on top of dimensions and rooms, that could create maybe a perfect experience for matching people to the right home? Or if I'm in HR, I'm going to look to a company, you know, whether it's a Salesforce or Workday, or any of these companies that are kind of in the HR or in CRM, and say, how am I going to identify the right prospect for a job or for sales? And I can combine that proprietary data, maybe third-party data that you're investing in, and then of course open internet data to get paired up. And then all of a sudden you say, I can charge for this content. I can actually drive revenue to the business. And I think we're waiting, and few companies have been really clear in articulating that early on.
Yeah. All right, Daniel, appreciate the insight as always. Thanks for joining us on Trade Talks. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.